With the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Of course, this week and last week really were both rough weeks in the market, and during that same period of time, we saw Michael Burry shut down his fund and Warren Buffett step down after making a huge call on Google. Let's talk about that and more. Stick around.
Welcome to the simple side. Market beating picks inside. There's no jargon and no time to waste. Join the simple side and end up in first place.
All right, welcome back to the Saturday Send Out, the podcast and newsletter from The Simple Side, which you can find at thesimpleside.substack.com. As always, I want to hit us with our quick reminders, our disclosures in the email footer. You can copy trade our portfolios on autopilot. You can get our daily news updates from thesimplesidedaily.substack.com. And you can find all of our stock research reports at thesimpleside.news. Now, I know that's a lot of different links and places to go. So if you want to find it all, just go find the newsletter. That's the best place to find all of our links, thesimpleside.substack.com, and everything will be right there for you. All right, we're going to start off this week with a little bit of market wisdom. Before I talk about the quote for this week, I just want to say Michael Burry, of course, just disclosed that he would be shutting down his fund, Scion Asset Management. This, of course, coming right after he disclosed some big bets against some big companies in the AI world, in the defense world. He was betting against Palantir and betting against NVIDIA. And of course, he had calls for Pfizer and Halliburton, of course, those being bets on energy for Halliburton and for Pfizer, betting probably for the GLP-1 race in their recent bid to buy Metcerna or whatever that company was that they were looking to buy for the GLP-1 pipeline. You can see his entire portfolio in the newsletter if you go and look at it there. I'm using a website called Insider Edges to pull in his portfolio stuff, and it's pretty interesting. So go and take a peek at that. But here is this week's market wisdom quote. Sometimes we see bubbles. Sometimes there's something to do about it. Sometimes the only winning move is not to play. That quote, of course, is from Michael Burry on October 31st, 2025. The quote's actually in reference to a movie called War Games, which is a 1983 movie, a little throwback, a little nostalgia for you, where a supercomputer calculates that the only way to win a nuclear war is by not starting one in the first place. Of course, this is quite a timely reference since the current race is to generate the most power through nuclear to power AI. That's all well and good and nostalgic, like I said, but there's so much more behind this reference in this quote as well. So he says, sometimes we see bubbles. Of course, this is referencing two main things, his housing market bubble that he saw in 2008 and the current AI bubble that Burry bet against before shutting down his fund. So sometimes we see bubbles. We saw one in 2008. He's saying, I see one now. Sometimes there's something to do about it. This, of course, referencing the fact that in 2008, there was something to do about that bubble. He went and bet against that bubble. But what he's saying is that there's not always something to do about it. For example, the reason why he's shutting down his fund is because he doesn't think that there's anything to do about the current bubble. And that's where his quote, sometimes the only winning move is not to play, comes in at the very end. You know, the current bubble is definitely real, and Burry believes that, and he believes that there's nothing that he can do about it. In a tweet and in some other quotes, he said that his view of market valuations and what's currently happening just don't align at all. And this happens to Burry often. He typically bets against something, and he's always early to the show. And so it's interesting that he would be shutting down his fund and giving this kind of last warning, as he's done so many times before in the past with these kind of cryptic last warnings before disappearing into the night. And that being said, it's clear that he thinks that we're currently in a bubble, but he just doesn't know how to bet against it and make money because the timeline is so random. He referenced that on November 25th, he's going to be moving on to better things. And so it'll be interesting to see what he announces there. Regardless of what happens, the world is going to keep moving. Stocks are going to keep having news. And that's why we're going to continue to do these weekly roundups. Stocks were ripping early and fading late. The S&P 500 down 0.7%. The Dow up 0.11%. And the NASDAQ down 0.23%. The 10-year hovered around 4.1%. Jeez, I can't talk today. The VIX pushed towards 20%. Oil stayed around $60. Gold eased. Bitcoin slid about 10% and broke below that 100K mark. Of course, returns this week were brought to you by AI Whiplash. Shutdown relief turning into a rate cut doubt and a market that still lives and dies by a handful of mega caps. I included a picture in the newsletter. This, of course, showing the top 10 companies in the S&P 500. Those top 10 companies take up 40% of the S&P 500, which means that 2% of the S&P 500 is driving 40% of the returns, which is scary for anybody that's invested in an index. The good news for us is that we aren't invested in the SPY, nor are we heavily invested in the top 10 stocks as a whole. The bad news is that when the S&P 500 drops, people tend to FOMO sell out of all companies, regardless of whether they're invested in the S&P 500 or not, and that ends up causing issues across the entire market. So while on one hand, the S&P 500 being over-concentrated doesn't affect us in my portfolios, on the other hand, when the market starts to come down, everybody starts to FOMO sell out. And so it'll be interesting to see if the S&P 500 starts to underperform quite handily and other portfolios, people that are picking stocks seem to outperform over the next couple of years. That, of course, all being predicated on the fact that the S&P 500 experiences a huge drop in the next short period of time here. That being said, we at the Simple Side have been expecting that sort of drop for a while now, which is why our portfolios have been riding with 50% cash. And so we've been waiting for that drop, just like you see people like Buffett waiting for the drop, building large cash portfolios in Berkshire Hathaway. And so we're just hoping to see that happen so that we can take the rest of that cash position and invest it in great companies that are at incredible valuations. So like I said, the markets were doing pretty well earlier in the week. Of course, a lot of that was being driven by the fact, or on the hopes, that Congress would wrap up the shutdown and that we would have a bunch of fresh AI deals. Of course, we've got that OpenAI AWS capacity pact. We had strong Palantir numbers. And of course, we saw Microsoft winning licenses to ship thousands of GPUs to the UAE. Then, of course, the mood flipped. SoftBank dumped its NVIDIA stake. CoreWeave flagged a data center delay. And AI leaders started to sell off midweek as people started to question multiples given the lack of potential rate cut in December. AMD, of course, stretched bigger. Long-term AI targets for them looked good. Anthropic, which runs the Claude AI model, laid out a massive US build-out, and Microsoft started to form their superintelligence group in competition with Meta's superintelligence group. Of course, Fed rhetoric remained split, and key October reports may never be fully published, as they said, which of course leaves rate cut odds for December wobbling around a coin flip. And speaking of that, Polymarket is a great resource when it comes to watching these rate cuts and the effect that they have on the economy as a whole. I've got some pictures of this in the newsletter. Again, thesimpleside.substack.com to go and see this. But you can see that the current rate cut odds for a 25 bips cut has gone down quite drastically over the past few weeks. Actually rose in July through October, was gaining. And then over the past few weeks, those rate cut odds started to drop. And what have you seen over the past few weeks? Growth stocks selling off over that same period of time. So you know that these rates are driving how these portfolio companies are performing. And you can see all that happen in real time on places like Polymarket. Right now, it looks like a 25 basis point cut is only 47% likely. And so this is the first time ever that the odds for a 25 bips cut dropped below 50%. And you can see that sentiment reflected in the markets. So you can go check out Polymarket. You can bet on this to hedge your portfolio. You can do nothing about it. You can just watch it. You can try to place orders in stocks based on the rate cut odds or whatever. But regardless, it's definitely a useful resource to go and check out and pay attention to. All right, there's a couple of other news articles, news stories to go and talk about, but I'm going to jump down to our stock research section. As of now, we have 6 closed trades, 7 open trades, so a total of 13 total trades. Our win rate right now is 61.5%. That means 61.5% of the stocks that we've talked about are green from the time that we spoke about them. Our average win is 12.49%, and our average loss is 10.53%. That, of course, coming from the recent stock market drops and all the stocks we were talking about before all of that happened. Currently, the average monthly return is negative 0.53%. So not a crazy outperformance there, but that's to be expected when you start posting research articles and then the market drops off. Nothing's going to look incredible at that moment. Of course, you can track everything at thesimpleside.news/stock research. So you can go and check that out or click the link in the article. This past week, we talked about Next Era Energy, ticker NEE, and Western Digital Corporation, ticker WDC, both of which are strongly connected with the AI bull market and have generated some serious returns based on all of the AI buildout that's been happening. So you can go and check those companies out there. Of course, if you continue down, we've got our portfolio information, a lot of this for paying subscribers behind the paywall. We're overextended in a few positions. Google up 58%, Bloom Energy up 360%, Lemonade up 79%, all of those in different portfolios. And we've got a couple of positions that are struggling in all the portfolios. So you can go and see that out there as well. Over the past 4 months, the AI secondhand effects portfolio is up 16%, tech focused growth 13%, and the flagship fund sitting around 1% to 2%. So, not incredible performance over the past few months, but better than the S&P 500, and that is what we shoot for. If you're a paying subscriber, you can go through, look at all of our returns, our holdings, and any updates that we have, as well as our weekly stock picks. So go and do that. Today's podcast, I guess, was pretty short, but I will be seeing you next week with more information, more news, more portfolio updates, and we'll get back into everything then.